Hello guys, another episode of Life Principles. Hello guys, another episode of Life Principles. So today we're gonna be talking about why forex trading doesn't work, right? So I'll share with you why I do this episode almost every single year, the start of every single year. It's because there are a lot of things that there are a lot of people who would be hyped about making money in the new year. So they will try almost everything. Then they'll go on Google and they'll say, okay, what are the things that are giving people money? Blah 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 blah. And because you know what, there are people that pay money to Google so that they have that CEO, right, which is SEO, not CEO. I mean SEO, right, which is search engine optimization. So the people that actually pay Google for search engine optimization, they pay so that forex trading is one of the things that come on top, because there are actually people who have money in the forex industry, right? Like the brokers, we have the institutions, right? We have the banks, and some forex traders, right? Then there are all these fake stories about how someone made a million in a day, and someone is making, yes, there are people who are actually making 1,000 in a day. Yeah, those are fakes, but then it's not everyone who's making 1,000 in a day. So what usually happens is, oh, just a minute. So what usually happens is, because you are going on Google, then when you are going on Google, they will tell you that these are the things that are making people money in 2026, right? You are going to try forex trading, right? Then they will all be adverts, right? Because in most cases, because there's an advert that's running, right? Hi there, I've made $1,000 a day. Today I've made $100, right? You were already messed up if you psychologically. You start to say, okay, what if I can make $100 every single day? Then you calculate by 30, and then you have like 3,000, right? But in reality, what usually happens is, why are they promoting? Are you going to be like, okay, this guy wants me to make money, so they're promoting so that I also come back and make money, right? I'll get into the reason why they promote these things, because that's where the trick is, and that's why most people then don't make money in forex trading. So the thing is this: everyone is up there about making money, and you want to make money. When you want to make money, you go out there, you try to find other ways to make money. So why is it that people end up not making money in forex trading, right? So the reason why I was saying, right, you have people advertising, right, in institutions, you have hedge funds, you have banks, you have brokers, then you have traders, right? All these guys, they will be advertising, right? Though most of the big guys, they don't advertise, like these top three, right? They don't really advertise. They're like, okay, you need to come big, because they deal with big money, right? What they do, they actually, if you have seen that movie, the Wolf of Wall Street, right? They actually go to the people that have money, because they know that they can't get these people's money by advertisement on Google, right? What they do, they actually call the people that actually have big money. So they say, do you want to invest in this stock? Do you want to invest in this, right? So the brokers are the main culprits here, because the brokers are the ones that are looking for the traders, the day traders. So they will advertise, so that you sign up with them. When you sign up with them, they can now register you into their B books, right? Because I think they have A books and B books, right? So if you are a new register, right, you get into B books. Then if you graduate from the big books and you've been consistent trading, right, then they put you into A books, right? I might be wrong about this, but then this is what I know, and you might have to fact check this one, right? So when you sign up, they will encourage you to sign up. They will encourage you to open an account. They encourage you to deposit with even $1, right? They will encourage you to try it. You can start making money from as little as $1 or as little as $5. Then they have like those minimum deposits, right? You can deposit $1. To you, you think it's not much, but imagine if they are going to get 1,000 people depositing $1 every single day. That's $1,000 a day, right? for them. Then, if these people lose their money, okay, we'll get there. If they only have 1,000 people depositing $1,000, $1 a day, that's $1,000, right? Times 30, that you get you to 30,000, right? That's the reason why they're actually putting those adverts. Because imagine if they can have people depositing dollar every single day for 30 days, that can be 30,000. But then let's say people don't deposit $1 every single day. People will deposit $1 5 days a week, and that will be 20 days a month. That still goes to 20,000. So imagine if a company is going to get 20,000 a month from the people that are just depositing, right? So now, what do they have, right? 20,000 times 12, that's 240,000 first year. First year. The reason why they want a lot of people to be signing up and getting these dollars is because they know that if they can get 1 million people giving them $1 in, like, on accounting opening, right? What is going to happen? They can have $1 million just like that. Just like that. You actually think it's your money? No, it's their money. So I'll explain why it's their money, right? So this is the reason why they advertise, because they need to get these people. So there's that thing where you have more of a sales funnel, right? You have a funnel. So what they are trying to do is to get a lot of people out there, right? The people that get in this funnel, what they then do is, with these people, they then know that they can get some people that are coming to account opening. So you have account opening here, right? This is your fishing net. Fishing net. That's their fishing net. So they are trying to get a lot of people so that they have a few that actually get to the account opening stage. Then account opening stage, they will try to make sure that you deposit the money, and they will be calling you. Oh, how are you, Mr. Nigel? We saw that you have opened the account with us. We wanted to help you to get started with your journey in Forex trading. Then you say, oh my God, I'm going to be the next millionaire, right? Then they'll ask you, do you have any background of Forex trading? Then you'll be like, yeah, I don't have. Then they'll say, okay, we'll send you some documents that you can read so that you kickstart. And you're thinking these guys, they're there to help you make money, right? That's what you're thinking. Anyways, yes, they're there to help you make money. I'm laughing. Anyways, so if they can get to have a fishing net that gets them 10 million people, and out of the 10 million people, right, let's say the fishing net has 10 million people, then out of the 10 million people, 1 million people come and open accounts, and they deposit a minimum of $1. That means they can get $1 million. That's why they love to deposit. They love to advertise, right? So the adverts that you'll be seeing on Google and other platforms, they are coming from these guys. And I told you of the brokers. The banks, they're in the hedge funds and institutions. They have their own way of getting big money. They are not looking for the fishing net as like trying to get 10 million people. But then for these big guys, right, they're trying to get maybe, let's say, 10 people who are willing to put $10 million each. So this is like 100 million that they can just move, right? Then they're like, okay, with this 100 million, if they can just put in the account opening, they've like 100 million. So they go for the big money, and they try to convince the big money on why. The banks, they will go and say, okay, you guys, you have been banking with us. We wanted you to have premium banking so that they give you these or these benefits. When you get these or these benefits, you can deposit more money into the bank. Then they can now use that money into the Forex market, speculations and stuff, right? So anyways, I've given you the rough idea why you actually see adverts on Google, and they will tell you about Forex trading, right? Then I told you about these guys coming back and saying, okay, let's get at least 1 million people to sign up with a minimum $1, right? And you saying, okay, I'm gonna just trade that dollar. Then because in most cases from the fishing net, right? Fishing net, yeah, fishing net. Then there are people that are, they usually call them the newbies, right? Newbies or new traders, right? These are new traders. Because the moment you open an account, they will call you a trader, though you are not a trader because you don't know anything. So they will say, okay, the newbies have deposited $1, $1, the $1, $1, right? Then they will say, okay, we will give you maybe a demo account, right? The demo account is something that they are just going to use to get into your head. You get it. And then if you graduate from this demo account, then you can go into the real account. Real account. Just a moment. Just a moment. Okay, we are still going through. So you graduate from the demo account, you get into the real account. So usually the reason why they then give you the option for the demo account if you don't have the money is they are trying to make sure that you see the reality of these things, right? Though there are so many factors that are not in the demo account. There are so many things that they don't factor in the demo account, right? Like the way the market is going to move due to liquidity shortages or liquidity increases, right? Because liquidity can increase or it can decrease, right? In the market at any given time, right? Other people will get closing their accounts and stuff, right? So they'll give you a demo account so that you feel like you're going to be making money, and they'll give you some insane account balances like 10,000, right? It's not again at the best of your for you, right? Why? Because if they're giving you $10,000 to start trading with, you know what's going to happen in most cases is this $10,000 you're going to trade, and you realize that you can actually make $1,000 from one single trade. And because you are a newbie, you don't know anything, right? There are two things that are going to happen in the Forex market. And these are the two things that actually happen in the Forex market, right? You either make profit or you make a loss. These are the two things that are consistent in the Forex market. So you either lose money, and when you are losing money, because it's not your money, you're not attached in a demo account, you leave it to run. Then when it's running, you come back, maybe after 2 days, you realize, oh, now I'm in profit. I'm making $10,000 worth of profit. You're like, what? But then you realize that this is not real money, so you can't withdraw it. Then you now start to think, what can I do with $10,000? Then you say, okay, I will deviate my own cap. So psychologically, you're being messed up by these demo accounts. You get the point, right? If it's a loss, you're just going to hold it, and you're just going to hope that this is now the psychology of trading, right? You're just going to hope that the trade is going to come back and it to be profitable. Then when it's profitable, then you are going to make profit. And in most cases, because any trade that gets you in loss can come back and it gets you in profit. But in sometimes this loss will be a big loss. But because this is not your money, what you are going to do? You're just going to close the loss. And you'll be like, I know it's a demo. And they even give you another option, right, to top up that demo account. Top up that demo account. Demo account. And again, you're thinking, man, I'm starting to get these things to be going, right? I'm starting to get these things to be going. Then you say, let me top another one. You top another 10,000. You've been given another chance to do it, right? What you are doing psychologically, you're training yourself. This is how the Forex market happens, right? I can make $10,000. I can make $20,000. And now that you've believed, you say you are not impressed with this demo account. So what do? You decide to go and open a real account. This real account. So now the reality of the game now starts to attack you. Like the liquidity factors that I was talking about. How many people have opened trades? How many people are on the buy side? Now the big goals, the bulls and the bears, right? In the Forex market. This is a reality, right? They're sellers and buyers, right? They are fighting, and there's always the broker taking the other side of the trade. Other side of the trade. Other side of the trade. And there's now conflict of interest. Conflict of interest. Because if the broker is taking the other side of the trade, there's conflict of interest. So just hold on. Okay, good. Good. Let's go on. Let's go on. conflict of interest. The broker has conflict of interest. They are taking the other side of your trade. So if you are buying, they are selling. Because you're a newbie, they do it. They know that chances are high you're going to lose your money and you are wrong. So it doesn't cost them much to take the opposite side of a trade, right? If it's a $10,000 trade that you have put, they have the money, they can put a $10,000 sell opposite side of the trade. And because they control these things, right? Again, other things that they never tell you about in this forex trading game, right? Because they control these things, what ends up happening is that these guys, they are going to take that money from you. But anyways, let's get back to the dollar, right? Why that dollar is important. So they know that there is a thing called leverage, right? Leverage. So with leverage, what happens is they give you $1. With your dollar, you can be able to purchase something that is worth, right? Let's say $300, because you have a leverage of 1:300, right? But then they give you a limited leverage. So you realize that on account opening, they are saying there's unlimited leverage. Leverage. Meaning that you can open as a big size account as you can, right? And I'll explain what a leverage is, but it's more of a double sword, a double-edged sword, right? Whereby if you make any mistake, it's going to make you bleed. But if you are using it right, you are going to be in some good time. So if unlimited leverage, you have 1:10,000. But yeah, a lot of brokers, they don't use this one. There's 1:2,000. This one, a lot of brokers, they offer it 1:1,000. Then 1:500. 1:200. Then 1:100. Then 1:10. 1:1. Right? So if the concept of leverage is that if you're using 1:1, if you are purchasing something that is worth $100, you need $100 in your account. You get it? If you want to purchase one lot, right, which can be up to, let's say, 10,000 something, right? I don't really remember what a lot is, like the theory about it, but I know the concepts about it. So if you are purchasing one standard lot, I don't know, you go and research what it is. Is it 10,000 or is it 100,000, right? What ends up happening is you need an equivalent of that amount of things that you're buying if you're using 1:1. So let's say one standard lot is 10,000, right? You need at least $10,000 to purchase that. But because you don't have that amount, they say we'll give you a leverage. So they will give you money from their account so that you can be able to make that trade, right? So if you're using 1:1,000, it means that you need $10 to get to make a trade that is worth $10,000, right? So if you're in profit, you also make money through that. So if these 10,000 things that you bought gives you a $2 profit, you're actually going to take the $2 profit from that $10, right? But then if they give you a $2 loss, what happens is you're going to lose $2 from a $10, right? So if they move a significant way to the extent that they have given you a leverage of 1:2,000, right? You have purchased something that is worth 2,000 and it's making you $2 loss, right? And you have $1 in your account. What is going to happen? You get to a point where they say you've blown your account. That's like people, if any person in the forex trading, they will tell you about blowing an account, right? Because the moment the loss gets to the point where it matches your account balance, the trade automatically closes, right? So what happens is you don't know about leverage. You open an account, you take the unlimited leverage because you are again going for the numbers. You don't know anything about it. You take the maximum leverage because even if you take the least leverage, right, it's not going to be opening an account. So you want to change the account type. You get the one that is the best leverage, which is the unlimited leverage. Then you have $1 in your account. You do the minimum deposit because you want to try it, right? And since you're opening a real account and to you $1 is not a lot, you know what happens? You say, yeah, let me go deposit my dollar. Now you have your dollar. But in most cases, both banks, they don't allow you to make a transaction of a dollar. They will have minimum transferable money, right? The Visa cards, the whatsoever. So you might have to transfer $10 into their account. It's something that they know, right? That there's that minimum transaction fee that they have to, a bank has to charge. So you need $10 to complete a deposit, right? For the bank to allow you to move those funds, because they don't allow you to transfer dollar. So because you need $10, you have $10 in your wallet. The broker gives you a wallet, then you have $10 in your wallet. Right. When you have $10 in your wallet, you deposit dollar because you're trying to try it out. Right. The dollar is blown away, like I said, when you make a loss, because it doesn't take any what do you got? Any signs out of this world to know that you're going to lose a dollar before you make $100. Because in most cases, you're going to try to make you have insane expectations. Because remember, you're coming from the demo account, right? The demo account told you that with 10,000, you can grow that 10,000 to 100,000. So you are still going to want to make $1,000 from this $10, but you want to play safe, so you are going to deposit $1. When you deposit the dollar, then you are going to lose it before it gets to be anything. Because it's going to get where you were making $2,000 profit from a $10,000 account. This is more of 20%, right? 20%. For a dollar, you are making 20 cents. So what usually happens is you want this dollar to get to make you $10. And what you don't understand is this dollars for you to make $10, right? I think that's more of 1,000% in a profit or a movement, right? So this is unrealistic because there's no market that is going to move in certain direction 1,000% and make those bargains, right? What they are going to do, maybe there's like 3% movement per day, all right? So I might not be sure about this one, but then I'm just giving you the examples, right? So because you have these absurd expectations about your dollar, you are actually going to lose the dollar before you make any money from it. Because even if it's going to give you 100% return, this $1, right, that you had, even if it's going to give you 100% return, that will be another dollar. So you have $2. But remember, you want 1,000. So what do? You keep on thinking that it's going to be going in profit, in profit, in profit, in profit. Then what is realistic is that if you open a buy here and the trade goes up, right? It can go up with that 20%, right? Then you have your $20. $20. With your $20, what ends up happening is that they will have to retrace, right? And come back. And before you know it, they'll go and make a 20 cents loss. If they're in consolidation, there's that range market. They have the bull market, then they have the bear market. Bear market is the market is selling, right? If the bull market is the market is buying, right? There will be increase in prices, right? Increase in prices. And this one is decrease in prices. That's a bear market. The range is whereby the price is playing in a certain range, right? So what ends up happening is they don't stay in this range for a long time again. But depending on time frame, they can stay in this range for a long time. So what ends up happening is they will break out and either buy or they will break out and either sell. So either way, you are going to make a lot of money or you're going to make a lot of losses, right? But the dollar that you had, it's going to give you maybe 20% profit or 20% loss. By the time you come back, because you are now in loss, you wanted to make money, let's say it's now 20 cents loss, you're going to close it and you say, no, let me try another one. Because again, you have been taught impatience. Impatience. You want to make this money as soon as possible. You want to make $100 per day as soon as possible because where you're coming from, it doesn't allow you to be patient. You get it, right? So what ends up happening is because psychologically, this game, you are messed up. you are going to be losing money. I think psychologically, I think you get where I'm coming from and where I'm going, right? Because you are impatient, you want to make an absurd amount of money from a dollar. Anywhere in the world, there's no way you are going to make $100 from a dollar. Just in a day, like boom. What would you have done? What did you buy for a dollar and you sell and it gives you 100% profit within a day? Actually, within some moments. Because in most cases, you want this dollar to turn up to $100 within minutes. Because the demo account told you that you can make $100 within a minute. Because you're using a $10,000 account. So it was easy for you to make $100 within a minute because you're using a $10,000 account. But then reality is that right now you don't have $10,000 in your account. Because if you actually had $10,000 in your account, you would be doing something different. So at the end of the day, psychologically, you're messed up. So what happens with your dollar? It takes a 20 cents loss, right? You decide to increase, because now you're on 80 cents. You decide to increase the lot size. When you decide to increase the lot size, what happens is that 20 cents movement, right? That movement that cost you 20 cents. If it so happens again, you are going to be cost 40 cents because usually you double the lot size because you are trying to make profit and you are trying to recover. You say, if I make this trade, I'm going to recover from the loss that I had and I'm going to make profit. Because remember, your goal to make $100 per day hasn't changed. It hasn't changed. So you're trying to make to cover up for the loss that you had, but you're also trying to make profit. So the only logical way is to increase, right, the lot size. Lot size. Increasing lot size means you are increasing the number of things that you are buying. So let's say you had bought 10,000 tomatoes in a market and you lose these 10,000 tomatoes. You go back and you take your money and you say, let me buy 20,000 tomatoes. So that with these 20,000 tomatoes, I'll be able to make the loss. If I make profit, I'll be able to make up for the 10,000 tomatoes that I lost, right? And I'll also be in profit. You get it. That's like the psychology behind it. That's why they tell you that most of this trading thing is psychological. If you can't beat it psychological, you're going to be doomed. So because you're trying to recover, what ends up happening, you don't accept again reality that trading is losses. You are only going to be looking at your funders, which is profits. But there's funders and there's reality. Reality is that trading has losses and the trade might not be going the direction you want it to be going. Just because you bought here, right? You put a buy here, doesn't mean the trade is supposed to be going in a buy, because you might be wrong. It can go up, and it starts to go down. You get it? This is the reality of the game, right? This is the reality. That's trading. You buy it whatever position you want to buy, but it can go up, and it starts to go down, right? Remember, you are also an inexperienced trader. You're just someone who came and you read some books, baby pips, baby what, right? You downloaded those books and you think you're going to crash it because you have some theory. There's that theory and there's practical. As with anything in life, you have practical, you have theory, and you have practical, right? They might tell you that it's easy to gain subscribers on YouTube, right? That would be theory. You can make 1,000 subscribers within a day, but then the practical is that you can only get one subscriber maybe at a time. But when you get 200,000 subscribers, you have most subscribers coming. That's why you realize that because I'm now there, I've done it, I know that what you just need to do is to be consistent. That's why I'm still going to offer value to the 17 people that are following me right now. You get it, right? There's also the funders that you think just by doing something you are going to get the best results, but you might be wrong. There's a reality. Practically, people are more prone to skip my videos because I have 17 subscribers than they are going to stay on the videos. You get it? Practically speaking, right? They don't know who I am in most cases, so they're more prone to skip my videos. That's the reality. But what funders can I live on? I can say I'm going to have 1,000 views within a minute of days. No, that doesn't do it, right? So your reality is that wherever you put your buy or your sell, right? The trade might go in your favor, in your direction for some time, then it will take the opposite direction. Remember, I spoke about liquidity increasing and decreasing, right? Liquidity increasing and decreasing. I will talk to you about what is liquidity, right? Liquidity is just the amount of money that is in the market, right? The amount of money that is in the market. It can increase, it can decrease. That's why I realized that in most cases, any country will tell you that January, there's that thing where they call January disease. Because in January disease, there's low liquidity in the market, right? A lot of money has gone to schools, other things, whatsoever, right? So there's low money in the market, right? As you come back to February, March, people are now trying to spend in the basic things that they always spend on, right? Because now there should be a rise in liquidity in the market, because now people are now revising their priorities and stuff like that. So whenever you have low liquidity in the market will behave differently. Whenever you have high liquidity in the market would behave differently, right? High liquidity means more traders and more money in the market. Low liquidity means low traders, and so these are the factors that might influence where this trade is going to go in, right? Just hold on. Okay, so now, because the reality is that there will be high liquidity, low liquidity phases, right? What's going to happen is that you will be banged. You will be banged. And your psychology is messed up, you are inexperienced, and there are factors that actually determine whether you're going to make profit or not. And there's the reality that the market is not going to shift 20% in just one day, except if there are news and stuff, right? And yeah, in most cases, they might just, if they shift, a big shift, they will retrace again. They are not going to just go buy. Because remember, if it's the forex market, the real forex market, what's going to happen is that they have regulations that are in place. You can't move the market to this extent. You only move it to this extent. It has to stay within this, right? There should be just justification why the market is to be moving in that direction. Why this currency got to gain value and why this one decreased. So you can't just say we are now going to mess up the whole thing because that's what you want. No. So because you don't know everything, you don't have information, you are inexperienced, right? You are going to think that the market will do whatever you want, your funders. No, the market doesn't obey your funders. The market obeys the rules. That's why principles are important in life. So what ends up happening is that you're going to lose the dollar. The dollar, from your $10, you lose dollar, you put another $2 because you're emotional. Now you have you have now $7, right? Then from there you might lose the $2 and you decide to put the $4, right? The next one. Then boom, you lose $4. You have already lost $7. You are now on $3, right? Then because you are left with $3, you know what's going to happen. We are just going to say, okay, let me put the wall of $3, right? This might take you a week. Let's say the best case scenario, it doesn't happen in one day. It takes you a week to do this, right? You are still going to lose this money. That's why they say, there's that statement which they say 90% of traders lose their money within 90 days. These are numbers. They say numbers don't lie, right? These are facts. So I lost a lot of money within 90 days. There are so many people that have lost a lot of money within 90 days. And this 90% of traders is why these guys, they are always advertising, right? Because they know that if these 90% are coming and they accumulate to be that fishing net, that I was talking about, right? If this fishing net and the guys that opened accounts, if these guys that opened accounts, it opened a value of, let's say, worth 1 million, they opened 10 million, right? $10 million, right? On account opening. That means 9 million is going to be lost with these traders. And you know what? The reason why I was telling you that they take the opposite side of the trade, right? The brokers, they know these are statistics. So they are willing to risk 10 million betting against your trades because they have the money. So they are going to risk their 10 million betting on it because they know that they are going to make 9 million taking your money. Because remember, whenever you make profit, someone lost money. And whenever you make a loss, someone made money. That's the reality of the game. So the broker then gets the 9 million, they make the money. Then out of the 9 million, they are willing to take maybe 10% or 20% of that and go and put it in adverts again, so that they again have a fishing net. So with this fishing net, they get another 1 million people who deposit $10 and they will lose $10, right? Then the broker will make another 9 million. And they will say, okay, out of the 9 million, what's 20% of that? They take 20%, they make another fishing net. Then they are advertising. And remember, the people that got in this fishing net, right? There are people who lost their $10 and they can afford another $10. You know what they are going to do? They are going to look for another $10. They are going to deposit. They will deposit another $10. So now they've recurring revenue, right? From the people that are trying to make up for their $10 that they lost. So these people, they are saying, okay, like maybe last time I made these mistakes, maybe this time I'll get it right. So they're trying to make money. So they'll come back, right? Up until this person gets to a point where they quit. That's, for me, it was after 4 years. Actually, it was after 5 years. 4 years, because I'd said I'm going to do it for the next 4 years. If I make it for the next 4 years, I'm going to. It's more of a degree. Then I will have learned a lot. Then I'm going to be making money. And boom, boom. You say you read all the books thinking that you are going to crack the code. No, you don't crack the code. The code cracks you. That's what happens in the Forex game. So if you stay long enough, right, it means that these guys, what they are doing is you will make a lot of profit from their initial investment of getting you. So let's say for them to get you, the cost was $1, right? It means that from this dollar, that was the cost of getting you, right? They can end up making more than 1,000% in profit if you stay in this game long enough. So if you come back and you say, let me put another $10, let me put another $10, let me put another $10. So it means every single time you are staying in this and you are depositing, you are making it profitable for them, right? So let's say out of the 90% that lose, right, 50% or 45% decide to stay, 45%. If 45% decide to stay and they stay for at least another 90 days, right, then it means these guys are going to be making money. They are in for the money, right? The brokers. Good. So that's what happens with the brokers. But the brokers, they don't stop getting new clients, right? They will still go out and fish and fish and fish and fish and fish. And for them, they will be making $100 a day and even more. and even more. So they have the right to tell you that you can make $100 a day, but then they'll be lying to you if they're saying they are making it. The people that are making it, they're making it through trading. For them, they're making it through trading by taking the opposite side of your trade. But they know that you don't have the information, you don't know how to trade, so you're going to lose the money. That's what they know. And those are facts because you don't have the information. You don't know anything about this game. So you lose the money. Even if you are going to read all the books, they will tell you about theory. They won't tell you about the practical side of this game and who is who and what. So now I have shared with you why most of the traders they don't make money, right? Because again, psychology, demo, and wherever I was taking you through, right? You're going to realize that in most cases, it is what it is. You don't make anything. You actually go back home and you cry because you don't know about the reality of forex trading. All right. So just to close this off, right, I'll explain a simple concept, right, about forex trading, right. You realize that in the real world, then we have the forex market, forex world. Let's say forex world here, then we have the real world, right? The real world and forex world. Real world, you have the manufacturer, you have the distributor, you have the wholesaler, then you have the retailer, then you have the customer. You know who gives him. Then in the forex world, you have the maybe the institutions, you have the banks. Yeah, you know why I say institutions, maybe hedge funds, yeah, and the other big guys, right? Investors, venture capitalists, whatsoever. You have the banks, right? Then you have the brokers. Is it the brokers? You have the brokers. You have the banks. You have the brokers. Then you have the your mentors, and the other trading academies here, academies here. Then you have these, the normal trader, right? So if you compare these two, right, what you're going to figure out is that in both of these worlds, right, these guys at the bottom, they supply money to all the guys to the top. Right. Anyways, I'll come back to the forex world. The manufacturer, he manufactures goods, right? He gives the goods to the distributor. The distributor gives the goods to the to the wholesaler. Because usually there is one or two official distributors of a certain product or a certain manufacturer, right? So these guys, they control the whole volume that the manufacturer is pushing, right? They are making a very little amount of profit, but they are pushing volumes, right? The manufacturer doesn't need to make a lot of profit, just needs to make a very little amount of profit so that he is constant in the business, right? Then the distributor takes a bit of that and he adds a bit of profit so that he's able to distribute things and still make profit. So for these guys, it's about volume. All right, volume. Then the wholesale again, he adds more profit, right, than the one that was charged by the distributor. But then he again puts volume. It's a matter of volume. Then the retailer, right? The retailer goes to the wholesaler. The wholesaler goes to the distributor. The distributor goes to the manufacturer. Right. The distributor gets things from the manufacturer, he gives to the wholesaler. The wholesaler gets things from the distributor, he gives to the retailer. Right. The retailer gets the things from the wholesaler, he puts a lot of margin, right? Margin here. Then he gets the things to the customer. The customer is the one that has the money, the dollars. Because he is not going to go anywhere with these things. He's not going to go anywhere. He is the end point of a product. Right. But that's where the money is. Everyone in this channel is trying to get the money from the customer and trying to get the money here. So we are trying to get the money here. So, but the person with the money is the customer. So in the Forex world, right, we have these guys. That's where we are trying to get the money to, right? But then it will come from this guy, right? Because this guy is going to be recruited by the mentors and whatsoever, right? Then the mentors are going to give their money back to with this through this guy's account opening to the brokers. Then from the brokers they will try to trade their way also. Yeah, before, because they are also new brokers. I'll tell you about them in another world video, right? New brokers, they also try to get into the real forex market. They lose money. Some of them they close off. Yeah, brokers they also lose money because when they make their 9 million, right? Remember, life is unfair for everyone. When you make 9 million, but you also want 100 million. So for most brokers, they end up losing money again, right? The banks they're there again. The banks they trade. They just also try to give the big money and everything like that. So these guys they play a game of volume, volume, right? Volume. These guys they're trying to get a fishing net. These guys they have their own way of having a fishing net, right? Then these guys they have their own way of having a fishing net. Remember, I said about venture capitalists, right? Hedge funds, right? They control big money, right? And because they control big money, they don't care about making a lot of profit. They care about just a light movement in the market. Then they close their trades. Take their money. Lovely stuff, right? So this is why you realize that you are never going to make money in forex trading, because you are the end product. You are the end point as a trader, as a retail trader. They call them retail traders, because they are all traders up the way, but then you are the retail traders, right? That's where you are the liquidity, right? They'll tell you about you being the liquidity. You are the liquidity. They take money from you, then they send it the whole way up there. Then you lose a lot. So that being said, guys, cheers. I'm out. Bye bye.